Hello, everyone. Welcome back. This is another episode of This Week in Coverager. It is the week ending September 18th. And as you can see, I do not have Sheffy and Avi with me. They are taking the week off or the day off for the Rosh Hashanah holiday. So filling in, I have two superstars in insurance. I have Kate Terry and Lance Poole, both co-founders of companies that I think are going to be doing some absolutely marvelous work in insurance. And I'm going to get their opinions on a couple of hot news articles that hit Coverager this week. So, Kate, Lance, hello. Thank you.
Hey,
Hello.
Nick.
Appreciate it. So you're filling into some big shoes here. You
It's a
ready?
tough job.
We're
Okay.
keeping the seats warm.
Okay. Just to give the audience a sense of who you are, why don't you take a couple minutes each? Kate, you go first. Who are you and what do you do?
Sure. Hi, I'm Kate Terry. I'm a co-founder and COO at Surround Insurance. We are about to launch in about a month, and what we do is we build beautiful insurance products that are designed around the lifestyles of young modern consumers. I have 15 years of insurance product management expertise before this at Progressive and Plymouth Rock, and most recently I spent 6 years as an SVP in product management at Liberty Mutual. So I've seen both sides of the fence, and I'm excited to talk to you today, Nick.
Yeah, so I think Kate and my first interaction was online on Twitter, arguing with someone about lemonade. That's a story for another day. We don't have to get into that. But so her name kept popping up, and it's like,
Hmm.
you got to be introduced, and now we are, and I couldn't be more happy. And Lance Poole, you are not a stranger to the Coverage Your Airways, but go ahead and introduce yourself and your company.
Yes, certainly. I'm Lance Poole, the CEO of Juniper Labs, and we help insurtechs, fintechs, brokers, agents, whole number of people find ground truth on small businesses. So we have a suite of APIs that help answer questions like, who are you? What do you do? Has anything changed? So really trying to help our customers understand their customers really well in the small business space, which is traditionally pretty hard to get good data on. And I'm an actuary by training, so spent the first 10 years of my career in the life industry, and have since made the switch over to commercial insurance, and really like it. So
Yep. Full disclaimer: Lance's company and my company have a something in place. So but no conflict of interest. I still love Lance, and he's going to be Juniper Labs is going to be helping me with some flood stuff. So it's going to be awesome. So welcome to both of you. And so I'll go right into the first news article. Let's see if I can do screen share the right way. This article here on Coverager, this one here. La, you guys speak French?
A little bit.
I'm from the South, Nick, so I have a hard time saying English
You're,
words properly. So let's not even go there.
okay, so Kate, this is for you. Let me know how I did.
All
La
right.
Parisienne. La,
Mm-hmm.
La Parisienne? How did I do? Okay, whatever.
Close enough.
Um, so La Parisienne is becoming, I think it's Wacom or Wacom.
That's the harder one to pronounce.
That is
Right?
the harder
Wacom,
one, yes.
Wacom,
Oh wait,
Wacom.
Lance,
I don't know.
Lance, Lance could probably help me with that one.
That's right. Maybe Wakem.
Yeah, that's probably the fish down in Alabama. You stick your hand in the mouth
That's right.
to
Yeah.
to noodling them. Um, Anyways, this was I think this was the top read story in Coverager for this week. And what's very interesting about this particular topic is that La Parisienne is like 100-plus-year-old company rebranding. And so I want to get Kate and Lance's opinion and insights on this. But are we going to be seeing more of this? Are we? Is this sort of, we the young the young audience is now like the pig and the python, kind of moving through the system. They're, I think, I think the largest population in the world. And so are we going to be seeing like these really classic companies with classic brand names all rebranding to be a little more hip, a little bit more, I guess, desirable to the young audience? So, Kate, I'll take your view first. What do you think of this?
All right, I'm going to go with a solid, it depends. So, Wacom, however we
Wacom.
decide to B2C, and they're rebranding. Wacom, we'll go with Wacom. Okay,
Wacom.
so if you think in contrast, you got the insurance brand disappearing here in the States. You've got Geico and Progressive that are 70 or 80 or 90-year-old brands that nobody thinks of as being that old. Well, what's the difference? And I actually think that it's largely about employees, right? So I'm an old school insurance company. I need to hire a bunch of people who know how to do technology and some really cool things into a business that sells insurance to other types of insurance companies. What am I going to do? I need to create that burning platform to say we're different, but I still need to be able to say to my customers, but really we're the same, right? So I think that's what the rebranding is. It's the burning platform. It's the identity. It's the we're different. We're entrepreneurs or entrepreneurs. We're exciting. I think that's really what this is about, that it's not really a consumer thing.
Lance?
It's interesting to see companies like this make rebrands. I worked with a company at one point in my career, and they went through a rebrand. And the indictment on the previous brand and how the company thought about the brand was the executive leader who was leading the charge on that brand change actually showed 3 or 4 different pictures of the brand throughout the building. And there was part of the logo that was on the left side on one place. It was on the right side on the other case. And they just really didn't care much about their brand, the image. And so it's pretty typical inside the insurance industry to not focus much on the brand. These guys are almost 200 years old. So it's wild. I think the article was 1829 is what I caught. And I don't know, I think that one thing that's hard to rebrand is the code base. It's hard to rebrand the 18 legacy systems they have. It will be hard to rebrand some of those aspects, but I checked out the site, and it's some of the best visuals I've seen from insurtech, insurance, fintech, like you name it. It's really good. It's really playful. And as a consumer, it certainly has a feel of being young, fresh, and modern. So I have to imagine they spent a lot of money on this rebrand. And I don't know, to Kate's point, maybe it does help with hiring. I'm sure that's a big part of it. I mean, typically when you do a rebrand like this, you're going to give away a bunch of t-shirts and other kinds of swag to the company, and everyone gets excited about it. It's like a way to create some news internally, but really like not much happens from the company's standpoint in terms of, what changes with the financials. Like no one gets a big bump in their stock price because of a rebrand. I think the market knows like, hey, this doesn't have a huge impact on what the company's going to do. So,
any chance of alienating? Like, so is there a line in the sand where it's just like, well, we may lose some of our older customers? Is that possible?
I don't think that's much danger in this case, right? I mean, it is B2B2C. So they're not really marketing at consumers, right? It's a white labeled product. It's hard to imagine that a lot of the insurtechs and MGAs that they're marketing to care that much about their brand name. And it's hard to think that retail customers or small business customers who presumably are still being served under the old brand name care that a big insurance company has more than one brand.
How about if let's take a lesser known company, like something in the States, something maybe just as old, like 150-year-old Mutual in the Northeast, for instance. And so would that benefit them? Like because that could be a situation where they may only be known locally. right? And so they could have a different set of issues, but also the same, I guess, frustrations in hiring young professionals and maybe even like being desirable to young consumers. Could we see that?
Yeah, I think at this stage, it's more table stakes than it is something that's really going to benefit your company. So if you haven't rebranded in the last 60 years, you should consider doing it just to just sort of keep pace. Like, it's not going to catapult you to the top of the line anywhere, but you should freshen up things. To Kate's point, I mean, it feels good to be at a company where things are modern. We're staying with the times. Our brand is more modern, reflects modern design. All those things are good, but I don't think it necessarily benefits you beyond just getting you up to speed with where everyone else is.
Okay, Kate.
Yeah, no, I agree with everything Lance said. And I also think those mutuals are in a really interesting position. You know, living here in the Northeast, there are 100 of them.
I know, yeah,
state, right?
exactly, yeah.
And a lot of them are in 1 state or 2 states or 3 states, and they have storied businesses in many cases. And a lot of them are sitting on a lot of surplus, right?
Yeah.
An enormous amount of surplus. So they're very stable, but it also means they've got to be sitting there thinking, what do I do strategically? And you've got to think that at least to a few of them, they're considering this insurtech, this younger consumer, because otherwise they're not going to be able to perpetuate themselves, right?
Yeah, or even competing against each other. So the three that I always think about are Quincy Mutual, Hingham Mutual, and Norfolk and Dedham, that are all right next to each other. And I bet Lance has not heard of any of those three, but all three are like, combined like 400 years old.
Yeah, and I know at least 2 of the 3 I'm familiar with. They're sitting on enormous cushions of surplus, right? As somebody who reads yellow books and such as a hobby, right? So what are they going to do, right? And I think it's not complicated, but it's a little bit more complicated because of the channels as well, right? A lot of these mutuals don't really sell direct to consumers. They do sell through a very loyal independent agent base. So I think the question for me is the best thing they could do to reach this customer really about the brand, right? Like rebranding themselves. Or is it actually figuring out how to help their agents sell more with more effective and efficient business processes and products that are maybe better designed for the younger consumer? And I'm not actually sure that the brand itself is going to solve their problems.
Yeah, that's an interesting point because, since farm bureaus and mutuals across the country are predominantly agent-based, it may not benefit them to rebrand because the agent's doing the selling for them anyways. So it might be better to spend that money or make that effort in towards the agency relationship, which is what Abhi and I were talking about the last, I think, 2 weeks. We're specifically about agency relationships and how, that's, if I had my druthers, that's where I would put my effort in. If that wasn't the distribution I was going to go after, I would make sure that I had some sort of differentiated relationship with them versus, just hey, I'm in a product with 15 other mutuals or other companies.
Right. Yeah, because if you rebrand and you're one of these older school companies, there's someone's job that's going to have to redo all the marketing pieces, for instance. Like there's some room with hundreds of marketing pieces, like these one-pagers that once upon a time an agent would give to a consumer. So instead of spending the money, to Kate's point, like redoing all that, why not give your agents like a video platform to, go and talk to their customers or record videos or do more on social media or things like that. They're going to help them be more effective to reach potentially a younger customer versus having to just change the logo on a bunch of pieces of paper.
Yeah. So you guys are younger than I am, right? So let me ask you, if does it resonate? Would it resonate with you as a part of the sales process if, let's say, you were sitting in front of an agent and they're giving you several different options, and one of them was like, this company's 150 years old, A+ rated? Like, would that mean anything to you guys?
All right, so I'm going to go. I'm
you specifically, not your peers. Yes.
Right. So I'm a Zennial, right? So I'm sort of between the millennial and the Gen X generation. And I'm going to actually quibble with you to begin with. I don't want to sit in front of an agent. I want the agent to Zoom with me
Oh,
or call me
Kate.
or send me an email or text me. Like, don't
Okay,
put paper in
okay.
front of me. I don't
The
want
email,
paper.
the email says,
The email,
Kate,
right. So, yes.
option three is a 150-year-old company, local mutual,
Yeah.
with, A plus rating. Does
Yeah,
that mean
I
anything to
like
you?
the local business, right? I like local. That sounds
Okay.
good to me. I like that it's financially stable, but I think the bigger question for me is, can I understand what they're selling to me? Is it what I was looking for? And is this just easy? Like, does it look professional, you know?
Okay.
No, maybe Lance, maybe I'm going back on not rebranding, but the branding needs to look crisp and fresh, which I think is what you said before.
Yeah, I think particularly in a world where you're going through aggregators and all you see is the logo. So if you're using an aggregator and you get a few price quotes, and you have this price that's, $19 a month, but the logo looks like it was designed by a third grader, because it's 100 years old and hasn't been updated. I mean, that's the kind of thing where it's like, yeah, is a legit company? Because I've never heard of, Frankenmuth, right? I don't know who this is or whatever the company's name. Not to pick on Frankenmuth. So I think that does matter. But Nick, to your question, it really is more dependent on the kind of product. Like if it's a commodity product, for me, if it's term, what's the cheapest and the easiest experience? Like I've just been going through the term buying process, and I was kind of on the fence between no medical paramed on-site thing versus the quick issue, but it was like $15-16 more a month, and I was like, I'll just get the person to come take my blood. That's fine. I'm fine with that. If it had been $3, no doubt, just go for it, and I'll take the quick issue. So I do like someone having an easy process. Like if they have a modern logo, but then you get into their quote flow and it's 18 steps, and you're having to refill questions several times. That's the point where I'm just like, I want to find something else.
Okay. So there's a lesson here. Like really, like whether for those that are listening, whether you think the branding thing is legit or not legit, there's still so many other aspects that seem to trump that. And I think most people would agree with that. That's
Yeah.
like, that might catch my eye, and that might be icing on the cake or something like that. And Kate, to what you said, I think it kind of swung all the way back that you if you're selling through the agency system, you better have your agents prepared to sell your product.
Yeah.
If they can't do it correctly, if you have the Fiverr logo, from the third grader, you better have the agent be prepared to field questions and be able to overcome objections. So it's just funny, like week after week, we almost invariably come back to that, that becomes a problem. And Lance, you brought up Aggregator, so I'm going to share the next article. Let's see. Here it is, and let me move over. Can you guys see that?
Yep.
So it's Policygenius launches with Lincoln Term Accel. So that's Policygenius is an aggregator. So Lance, you brought that up. Can always count on you to do the proper segue for me. And you also brought up term insurance too. Like you were just like, boom. Just like came prepared, guns blazing. And so this ties in a little bit to the prior one as well, because Lance, you made that appropriate segue, which is, so we got an aggregator selling Lincoln. So this, I think, was the second most viewed article on Coverager for this particular week. And what I found interesting about this is that Lincoln is selling this on their website. I gotta believe they're selling this through agents as well. So again, we seem to come back to these stories over and over again. I am a shareholder of Lincoln, so I have a financial interest in this, and full disclaimer, but it's that shotgun approach. It's we're going to use any and all distribution channels. And, I can tell you from having spoken with Avi and Sheffy so often about this, and me personally, it seems too broad. It seems distracting to have so many different distribution channels to be able to do this. And I know personally on my side on property casualty, I've seen so many companies get into like channel conflicts and all this other stuff. So, I'll kick it to you guys. I'm not sure what to make of this. Like, there's so much here that I'm scratching my head about. Lance, you brought up the medical exam issue. Like, at what point does this not work? And how do these companies balance all of these things?
It is a mess in terms of having all the different distribution channels, and particularly because a lot of the traditional carriers aren't set up to effectively handle all those channels in an efficient way. I mean, and things have changed. So full. I'll caveat this with the time out of the life industry. It's been a few years, but at one point we'd have a CSV file we're having to send to different distribution partners when we were changing term rates, and like, oh wait, we sent you the wrong file, don't do that one. Or we're seeing a spike in sales. I mean, there's just all kinds of things that happen because it's such a manual process. So Nick, when you add a new channel like this, it does create more complexity, and you have to ask, is it worth it in terms of the value that's there for Lincoln by, selling a bit more cheap term online? But, maybe if they're getting a younger customer that could be a customer a longer term, buy a few more products, then maybe it's worth it.
Yeah, I would tend to agree with you. I mean, I think great move for Policygenius. Lincoln depends on whether it's profitable business and they can write a bunch, right? Who knows? But I think this fractured distribution system we have where everybody sells the same products. You don't have specific channels that specialize in specific things, which might make sense. It shows that our industry has really failed in two broad areas. One is a total failure to design around a comprehensive customer experience, right? I mean, my parents in their 70s shop on Amazon, right? They expect an experience at least that good when they go to buy insurance, and that is just not what you get on most sites. If you do get a great experience, it's usually for a very simple, small chunk of the insurance that you actually need as your life moves forward. I think the other thing that we've totally failed on as an industry, like we can do better, is in the products that we sell, right? We have this very rigid mindset around homeowners and life and disability. Oh, and that's completely different from auto. And I can tell you just, having been in the industry long enough, that often you have no idea if a customer has both an auto policy and a life policy with you, even if you're a large carrier that sells both. Every product is sold in its own ecosystem. Lance, you made a joke about the Parisienne working with 18 different legacy systems. I'd be amazed if it were 18, right? I bet it's like 243 systems, right? Yep. All like bolted together with some COBOL in there somewhere, right? Like API what? And then also people's training, right? I made the move from personal lines to commercial lines at a carrier, and it was like an unusual thing to do. That shouldn't be a big deal, right? But it is. So we get this rigidity in the way we're trained in the matrixed organizations where there's somebody responsible for each product. And then we blame it on kind of being a regulated industry. And I think those excuses just aren't good enough. So we're seeing this fragmentation, and that's where a lot of the insurtechs are coming in. That's part of what makes it exciting. But it really is a failure of kind of design around the customer and designing products for those customers.
But it's a victory for Policygenius, right?
For sure, yeah.
Yeah, and so it's one of those things where that the aggregation space could have like winner take all characteristics. Like there's probably a scaling benefit where you just get so big, like an Amazon. Like you get so big, it's just like it's too difficult for a smaller aggregator to make any noise, too expensive, and so for the aggregators, it makes a ton of sense to be able to pull this off and sort of get these products one by one to come off. But I think all three of us are just scratching our heads at the carrier side, and how are they going to pull this off? And maybe this is where they could rebrand. Like I've always like, okay, you want to use that channel, go ahead and use your channel, but like, like for example, some of these mutuals have like several licensed companies, right? Why not carve one off and say this one's going to be dedicated to this particular, set of channels like the, D2C, and this one will be the agent one. And I don't know. I'm not sure about that, but to me, it seems confusing for their branding when they're scattered all over the place.
I think though that it can be tough on the cost of acquisition side in terms of, now we're a little inside baseball, but in terms of allocating expenses. So if you have both a big direct business and a big intermediated business, say through agents, if you're doing a lot of advertising, not that a lot of the mutuals are, they're too small, right? But if you're doing a lot of television advertising, Progressive and Geico, these companies are spending literally billions of dollars on advertising. Some of that benefit, you can put it through as your cost of, your CAC for the direct business, but it does also drive people to your agent's offices, right? And so I think it's a little bit of like a love-hate thing where none of the agents want to look at a direct quote that some customer brings in that they can't beat, right? Especially if you have different rates. But on the flip side, it does drive people into the office. So I think it's like, I take your idea, Nick, and I think it's definitely makes sense in some cases, but I think it can complicate that relationship as well.
Yeah, fair enough. Lance, I would think that maybe insurance is different. Maybe when we discuss branding, the way we think of it with other industries, it's just different in insurance, just like the way the product's different, and we're trying to fit a square peg into a round hole.
Yeah, I think we're starting to see some of these commoditized products move to platforms like this because it's just not profitable to sell a 10-year term where the premium is $17 a month, or for an agent, it's not worth my time necessarily to go after that because I don't really get much commission. So maybe that's one of the things that drives the difference. But one thing I wonder for Policygenius, and maybe this can't be done because it's so different, but does Policygenius ever end up in a place where they just create their own product, like go get paper, and they've seen the experience of other carriers, they know all the pricing, maybe there's a way for them to say we can do it better, similar to the Amazon approach of let's go ahead and produce the USB cord because we see that this thing's selling really well and we can make some money and do it cheaper than what our competitors are doing. But I don't think that's happened so much in the UK. Like I know the UK is well ahead of the States on the aggregator market, that much easier to price shop everything there. But I don't know that those aggregators are necessarily doing their own products. So there could be other limitations to that. But that's one thing to watch out for a Policygenius as they grow and scale. I mean, they've obviously got, raised $150 million plus. I can't remember if they're valued at $1 billion, but close to it. So they're growing a big company, right? Yep. And maybe that's what helps them sort of step change on that, is to start offering their own product.
That's where potentially where the where there is a benefit. You brought up the UK. There is a different. That's where regulatory issues do come in. You essentially have like 50 different products, that you have to sort of keep track of, and it gets really expensive to sort of manage that. And so, balancing all of that off becomes problematic. So a question I would have would be, Lance, you brought up commoditized product a couple times. So, take something like that Kate's working on, which is more of we're reimagining and going to create like a new, we're going to fit the insurance to match the person or the exposure that you have that's different now than it was 10 years ago. Would an aggregator work for a non-commoditized business or product?
That's a really interesting point. I mean, it could. I think what's challenging in all of this is that the pieces of insurance really do fit together in a way that is sort of beautiful in some ways and makes it really difficult to pick apart in
Yeah.
others, right? Like,
Yeah.
if your belongings are stolen out of the back seat of your car, it's not on your auto policy, it's your renter's, your homeowner's policy that covers it, right? And that's like one example of a million of these things where old lawsuits divided it. So you need to do something about that, and that's hard for an aggregator to do. It can be done, but it's hard to do if you're pulling policies from different sources, right, to fit them together. If you're an MGA like we are, or a carrier like any of the carriers who have the knowledge but maybe not the will to do some of this stuff, then you can pick your policies and craft them together so that they fit, right, and talk about them coherently to the end consumer instead of in these rigid silos, and still pass it all through the back end like traditional insurance. So I think that would be tough for an aggregator. But then again, what's to prevent an aggregator from setting up an MGA or a carrier if they had, if they've got cash sitting around, and managing both their own product and other people's products, right?
Yeah. Any comments, Lance?
Yeah, I don't think the distinctive, real unique products do fit in the aggregation, because at the point of an aggregator is allowing for simple price comparison where there's really no difference. You're comparing apples to apples in every case. And so if the Lincoln product is $22 and the AIG product is $25, I can pick the Lincoln product. But I do think that it's a strong approach to build unique products, assuming you can find some market adoption. There's just I've seen all kinds of interesting life insurance products, but everyone just sort of comes back to give me 20-year term. That's going to cover me until my kids get to college. So I'm good with that. So it's hard to blaze a trail on these financial services products where I just needed to do a financial protection thing versus creating an iPod, which is like 1,000 songs in your pocket. That sounds really exciting and it's new and different. I'm willing to try that. But
unless it's unless you have skilled salespeople.
Yeah,
So
definitely.
For like life insurance, I know, having been in the financial planning space, there is a big need for whole life, variable life, because it's different than just like I need life insurance for when past the point where my kids get to college. It could be a tax situation.
Mm-hmm.
It could be I want to leave a benefit for someone, a charity, and so that's also what Sheffy and Avi and myself have been talking about. I feel like there is a line, like there's a price point, right?
Mm-hmm.
Where when you get above that price point, it's really hard to do digitally. Like I don't want to whip out my credit card for $1,000 premium because what am I buying? Like
Right.
that's $1,000. That's not the iPod. Like it's not fun. Like I'd feel more comfortable with a little bit more research or something like that. Or to what you just described, Lance, I think if it's a complex product, you need someone that can figure, this will solve a problem, but I need to get in front of the people who have that problem. That requires a whole skill set of prospecting and sales to do that. So it sort of seems to keep swirling around there, which makes me believe there is a limitation to what the aggregators could do. If Amazon or Google came in, there would be a limitation to where they could take this, given what their DNA structure is.
Yeah, and they've tried. I don't know if there's been as much effort in life insurance, but I know in the mortgage world, Google entered the mortgage world, mortgage aggregation, and you get quotes, and they abandoned that business 18 months in because of the regulatory overhead. And I think they were also competing against themselves a bit because they're getting all this money from mortgage companies to buy AdWords. And then they also have a platform themselves. So I think that's the other thing to think about, particularly with Google, is they're getting so much money from life insurers on those AdWords, the most expensive AdWords there are. So they have very little incentive to mess with that and just want to keep the money flowing there.
Yeah. Kate, what's your strategy for Surround?
Yeah, I'll tell you a little bit about that, and then I'm going to throw out a hypothetical product and see if we can think of a way to sell it online, okay? Because I got an idea. So our strategy is that our initial product is aimed at asset light urban professionals, right? So people who drive but don't own a car, they rent an apartment, they do some freelancing. It's really hard to buy the right insurance for that. Like, think about that angsty moment if you don't have your own car insurance policy, when you're standing at the rental car company and you're like counter and you're like, well, when people use travel, right? And you're like, I think my credit card covers this, but I'm not sure.
Yeah.
By the way, go look, because the liability may well not be covered, right? Depending on your card. So what we're selling is a flat priced bundle of, driving coverage, cycling coverage, renter's insurance, and
Yep.
some light professional liability. 3 minutes to quote and sell. Super easy design.
Low premium.
Low premium, but higher than selling, a renter's policy alone in the independent agency channel, right?
So direct to consumer.
That moment. Yeah, it takes care of that moment where, independent agents, right? Independent agents by and large are intergenerational businesses, right? Like, they insure your parents, you're on your family's policy, you leave to maybe go away to college or to go take a job or join the military. And it used to be that you probably bought a car around the same time, and that was the intergenerational handover, right? But people are delaying the purchase of those assets, or they're not buying them at all. Like, our lifestyles have changed. And so the agents are standing on this burning platform where they know they need to find a way to get that customer. But if they wait until 8 years later when they buy a car, then they're competing with $2 billion of Progressive's ad spend, et cetera, right? So it's that. So it serves the agent and the customer. There's not as much of a safety net as there used to be, right? I think we all know that.
Yeah.
So I'm going to actually throw out a challenge there to the prior conversation, which is, I think we kind of all settled in on, it's hard to place non-commoditized products in online channels or in aggregators. So I'm going to throw out an example, and you guys fight with me on this. So what if, instead of aggregating things like, here's your homeowners and here's your auto and here are 8 options, instead we're kind of like, who are you? What's going on in your life, right? And we find out with very few personas, there's some common ones, right? One is that you're a freelancer or solopreneur, and you got your own business, and you need health insurance, and you need life insurance, you got a kid, and you need disability insurance as well, probably, right? Well, we already sell disability with the life as a rider, right? Is there any reason we can't sell the health insurance as well and bundle it up in like a health and life package so that it's easy for you to understand? Like, the problem today is that we're breaking that up into like 5 different things and then telling you about each one separately, right? I think that's an approach that could really work. You just can't do this like, let's define things by existing line of insurance and try to talk to people about them.
Do you know the answer to that, Lance? Because Kate, like, this is just so coincidental. I was literally thinking of, life and health have, they both have like a wellness component to
Yep.
that. Like, and I just interviewed someone from John Hancock about their Vitality program.
Vitality, yeah.
And I'm thinking, that's a life insurance product. I'm like, I haven't heard any health insurance insurers do that. Do you know the regulatory pieces of that? Can life and health be bundled?
So I don't know. I will admit I'm licensed to sell both health and life and have never sold either. I'm definitely a property and casualty person. But I think there's also a distinction, which is true in the property and casualty space as well, between bundling things in the sense of this is the only way you can buy it and it's one policy, right? Which is an approach that has been tried many times. It's burned up a whole lot of capital and hasn't really worked that well, generally speaking. And then there's an approach that's like, let me talk to you about your life holistically. There are a bunch of little pieces I'm going to put together for you, but I'm going to talk about it in ways that make sense to you. If you get hurt, here's what will happen, right? Should something happen to you or your partner, here's what will happen to your children, how they're supported, right? Like, some of it is how we talk about it and how we present it without hiding that you've got multiple policies. But I'm sure there's some health insurance expert who could tell us, right?
Yeah, I don't know the details as much, but I do know you can sell supplemental health along with life, and there's riders, but it's very defined in terms of what's covered, and it's different than traditional health insurance is. So there are some regulatory restrictions, but it is insane they're not more closely connected. I mean, I mentioned I'm shopping for life insurance policy. I also got a physical for the first time in like 4 years. So in the span of 1 week, I'm going to have blood drawn twice. I have to use the right arm this next time. But it's crazy,
it's ridiculous. It's ridiculous.
So I should just be able to show them like, hey, here are the results from my blood test. Here's the thing I got from the doctor. But of course, like, none of this talks. And it would be great if you could sell life and health. And I think that's like we talked about, I think you were talking last week, Nick, about the role of the financial advisor and how, they can play an important part in some of these things. I feel like that's what I wish financial advisors were empowered to do. Like they're like the chef and they have all these ingredients, right? And so it's like, I just put the ingredients together and I've got a beautiful cake for you that is going to cover all the needs you have. But instead, there's like only certain things financial advisors can do. And a lot of them, like financial advisors, I know a lot of them that don't sell life insurance because they don't want to ask about your health. They don't want to ask the questions, how much you smoke and, if you have diabetes and those sorts of things. It's like, that's not my job as a financial advisor. So I think some of that limits both of those things being done together, which could be a good way to have that be done online in a way like, if a Wealthfront or Betterment or some other platform, because if it's just an online form I'm filling out and someone's processing it, maybe I'm more open to talk about those things. But it's an interesting problem.
There's just so many things that are broken. I just remember the last time I went to the doctor's office and it's like, fill this out. And it's like, I already filled this out. Like you emailed me and I filled this out. And it's like, well, you got to fill it out again. It was like, oh, I had to do it by hand. And I just felt like I was answering the same questions over and over and over again. And it was just incredibly frustrating to do that. And Kate, to your point, and then we'll call it quits here. But I think there's a line in the sand. Like I think as to what Lance said, there's you get to a certain stage in your life where your life is complex or you have assets or there's something unique about it and like I just want to talk to someone about this.
Yeah. We it was interesting. We did so many interviews of kind of younger consumers to talk to them about insurance, which certainly made us a hit of every cocktail party, right? But it was interesting. Everybody says millennials and Gen Z, they don't want to talk to anybody. That wasn't what we found, right? What they want is a totally beautiful, digitally enabled insurance experience or an experience generally. But then when something's complicated, like there better be somebody to pick up the phone, like a warm voice that, knows who they are and can talk.
That makes perfect sense, right?
It's so
like,
human, isn't it?
Yeah,
Right?
it's like make the experience easy, like the story of the doctor's visit I just had. Like, why am I filling out this form multiple times, especially when I filled out one digitally already,
Right.
But it's true. It's true that, when Lemonade started, they were adamant. There will be no number that you can reach us at. This will be all digital. And that didn't work. Like they actually had to create a call center because things get very confusing, especially at claims time. Like, holy, my place caught on fire. I have no place to live. Like I don't, a bot's not going to get me into a hotel. So I think those are some really good points. And see, I scheduled half an hour or 45 minutes and we always go much longer because the conversation is so stimulating. But Kate Terry of Surround Insurance and Lance Poole of Juniper Labs, thank you. I appreciate it.
Thanks, Nick. It was a blast.
Okay, and for anyone that's listening, this is the This Week in Coverager for the week ending Friday, September 18th. And don't forget, still wear your mask. Come on. I can't believe I still have to say this. Just be respectful of one another. It's not that hard. You can do that. And if you get a chance, click that subscribe button or go, make a comment and be good to us. So for Kate, for Lance, for Nick, this is This Week in Coverager. Until next time, have a great weekend, everyone.